Good morning, Southwest Florida. You're listening to Saving the Investor radio show, and we are coming live from our Fort Myers office, and this is going to be a great show. And with this great weather that we're having, I'm all pumped up. We're going to play some golf later, so I want you to really mark this number down John's about to give you, because we are going to give you some real good information today. Good morning, John.
Good morning. Great to be in studio with you, Alfie, and it's a great day to be in Southwest Florida. And as always, if economic uncertainties have been putting your financial decisions on hold, you really need to grab a hold of Alfie's free toolkit that will help transform your worries of retirement into confidence. You know, Alfie's toolkit will give you a wide range of materials, such as will your money last as long as you do? You're going to need to know that in retirement. Are you paying too much in taxes in retirement? Social Security decisions guide. When is the opportune time to take it to maximize your Social Security benefits? To get Alfie's free toolkit, simply text the word KIT or call the operator at 239-747-1077. Just text the word KIT. Don't wait till the end of the show. Do it right now. Pick up your smart device and text the word KIT to 239-747-1077. That will take you to a landing page, and you'll be able to access all of that information absolutely free, and that will help you navigate the fog of investing. And Alfie, it's been an incredible run in the market, a lot of things driving the markets, but I'm sure you have some insights that can help our investors really know what's going on beyond what they're hearing just in the news or the financial report.
Oh, absolutely. We're going to talk about that, but NVIDIA, my goodness, I'm glad it's in our portfolios pretty heavy, because that is a stock that is here to stay for. I'm hearing people, that really know this business. They're saying this is one of these stocks that, like a Microsoft, this is the leader in AI. So if you have NVIDIA, or if you don't have NVIDIA, even though it's a high price right now, I still think it's a stock that's going to be around where it's going to split and then go right back up. So this is something that you need to know more about. But NVIDIA really came out with earnings late after the close on Wednesday, and really helped propel a great market on Thursday. It just had a NASDAQ. It just really propelled the whole market. So good news, and they didn't know what that was how that report was going to come out. So Wednesday, the market, if you go back to it, it wasn't really, it was down most of the day pretty bad, and it made up a lot of the losses, towards the end of the day. But NASDAQ was still down a little bit on Wednesday. And then overnight, the after hours, I should say, then NVIDIA earnings came out, and it just, pop the top off.
It's rocking and rolling, and I like what you said there. You said, I'm glad it's in our portfolio, because you really don't know what sector, what stock, what asset class is really going to do well, and you have a plethora of really great stocks within the framework of your custom-made portfolios. Maybe you want to talk about that. You custom-make these portfolios really to maximize people's income plan so that they can, take income out of that portfolio every year, don't you?
Yeah, this is a good point, John, and that's what's nice about having a SMA account, which is a separate managed account, which means individual stocks build that portfolio. Even with our S&P, we have the S&P 50, might be 55 companies in there, but opposed to having 500. Out of those 500, there's like a handful of companies that are really driving most of the returns of the S&P 500. So there's a lot of companies in the S&P that's really dragging it down or not doing much for it. So if you can weigh more for other companies that are doing much better or have less, get rid of 450 of the companies that aren't doing that good, and concentrate on the 50 that are doing real good in the S&P 500. That's where you get that added return. And if a company doesn't do good, like we had one that we built a nice portfolio here with our managers, and a couple of years ago, and about a year and a half ago, Target was acting up, and so we were able to pull Target out and replace it with Costco. And so when we did that, we made up the losses of Target because the losses came from their shenanigans, with going woke.
Yeah.
And remember what they say, you go woke, you go broke. And so we were able to do something about it. When you have an index fund like the S&P 500, you can't do anything about that, but just stay with the course. So it's much better to have something customized. John talks to you about that. What our portfolios are customized, and we can take some companies out if things change to replace it.
Yeah, that's a great point. And one of the great things that you can do that you can get a hold of because it's in high demand again this week is Alfie is offering his brand new copy of his book, Making Waves in Retirement from Waypoint to Waypoint. And a complimentary copy of his book awaits you. To claim your book, all you have to do is text the word book, B-O-O-K, to 239-747-1077. Alfie's book is your guide to a fulfilling retirement. You don't want to miss out on the valuable insights, including many stories about investors that he has helped save. That's why he's named this broadcast Saving the Investor, because he wants to save you from the pitfalls, the schemes, the traps of Wall Street. And you can get a hold of his book right now by texting the word book. If you don't text, call the operator. Tell them I want to take advantage of Alfie's free offer of his brand new book that just came out. 239-747-1077. You can text the word book, B-O-O-K, to 239-747-1077. Don't hesitate or wait. Do it right now. Don't wait till the end of the show. Grab a hold of it so that you get yours reserved. The Federal Reserve really hasn't moved anything. I'm going to be through the first quarter in another month, which is amazing. The year is absolutely moving again. If he starts cutting rates, maybe half a point, what is the projection on the cuts, and what will that do to the market? I know you always talk about that's factored in already, so they seem to be operating based on what he's going to do, right? Not what he's
exactly.
done.
The markets look ahead, and that's why they had a little pullback a few weeks ago, because the fact that the numbers came out better than expected it was hotter for inflation, so that wasn't good. So the Feds are not going to be really hurry about cutting rates. So there was like 6 rate cuts factored in earlier this year. Now it looks like it's 3. And, so we're not going to have any in the next rate cut. It's not going to be the next in March. It's, probably going to be more, they're talking about more June having a rate cut. And then you're looking at probably 1/4%. They're not going to be cutting these 0.5% anytime soon. I think it's going to be, probably 3 rate cuts maybe over the course of this year, possibly 1 over the course of the year, meaning not just 1 rate cut, but 1%. Like some 1/4%, maybe some 0.5%, but it definitely slowed down because the market is factored that in there, and then you look at inflation is still high, so why would they want to cut rates and then have people spend more money? So that's why it's going to be, you got to get inflation under control. Once inflation's under control, then you're going to start to see economy start to slow down, and then you'll start to see it.
Yeah, well, retail sales were down, and if they wait till the end of the year, towards Christmas, if he starts cutting big chunks like you said, that could drive a frenzy of people buying, putting on the credit card. Couldn't that send a spike into inflation again?
It could. That's why they have to be concerned with this. And I feel that the markets are saying, okay, we're not going to have these rate cuts. But the economy's still good. People are still spending money, so they're living with what they have to offer right now. But it will be, you have election year, so you don't know what's going to happen. You will probably start to see some rate cuts because Biden wants to have everything going his way, closer and closer to the election, and it's he needs, hopefully he'll start to debate a little bit. That's not going to happen, but a lot really in election year can happen. So you just got to be prepared for that November or October surprise. It always comes out, October surprise, and who knows what the heck it's going to be. But the markets are doing pretty good. We're going to talk, we get back after this commercial break, we're going to talk more about inflation and what the Feds are doing and what to expect in this, and what economists are saying about a recession, if we're going to be in one, if we're going to skirt it or what's going to happen. But we will be right back. You're listening to Saving the Investor. I'm Alfie Townsend, Southwest Florida's certified financial planner professional, here with Pastor John Antonucci, and our phone number is 239-747-1077. That's 239-747-1077. We will be right back. Stay tuned.
Welcome back to Saving the Investor with certified financial planner professional Alfie Townsend. You know, Alfie has over 40 years experience as a CFP, and he is a fiduciary as well, which means his responsibility is towards you. And if you haven't noticed already, we're in the middle of tax season, getting ready for April 15th. And taxes, you may not know, but are a ticking time bomb that really deserves your proactive attention, because taxes are complex. And the tax laws are about to expire in 2025, which means that could be a lot more money coming out of your retirement that you're not really prepared for. But Alfie is prepared for it, and he's here to guide you towards securing your financial future. So imagine a world where you can save more on taxes and protect your wealth. You know, it's really not a dream, it's a reality. Alfie has put together a tax bill calculator that you can get a hold of, and it's a great white paper that will help you really put together a plan. And his goal is to, number one, lower your tax bracket. Number two, protect your money when taxes rise. And number three, create a tax-free income. Can you imagine that? Pulling money out of your account tax-free. All you have to do to get this tax bill calculator is text the word tax, TAX, to 239-747-1077. Again, that's 239-747-1077. Don't hesitate. Don't wait. Pick up your smart device now. Call the operator and ask for the tax map, or text the word tax to 239-747-1077, and you'll be able to find out about Alfie's tax bill calculator. And Alfie, taxes are really something that are going to change unless Congress does something by next year, 2025. And we think, wow, that's a year away. But look how fast the years are going. And look how people are really just sitting and waiting for things to happen. You have to be proactive so that you can protect your nest egg, don't you?
You got to be proactive. You don't want to wait. You know, that's the difference between, proactive and reactive. Is you're reacting if you don't have a plan. That's what you're doing. You're just reacting, and you're driving yourself crazy, and things usually don't turn out too good when you're reacting. So proactive is having that plan in place where things are just going fantastic, because if you have to adjust for things a lot of times on the fly. You do have to make adjustments, but you plan that in your plan. You don't want to plan things that you had no idea things were going to go as bad as they are, and then you don't have an income plan. You don't know where that income's coming from. But right now, I want to talk about employment is still looking very low. Matter of fact, it's the lowest it's been with these high interest rates in the last 23 years. The economy has endured the highest interest rates in 23 years, but with those high interest rates, the economy is still doing pretty darn good, and that's what's baffling about this, economy. Now, are people borrowing money on their credit cards? And I would have to say that's the silver bullet, I think, keeping the market going, or the economy going, is that credit card debt, it's the highest it's ever been.
$1 trillion, isn't it?
Yeah, the highest it's ever been. So so I'm a little concerned about the credit card debt that we have with the high interest rate. Think about this. The rates that people are paying on their credit cards now, if they're not paying that bill off each month, and John, I know you do it, I do it. I remember, starting this business many, many years ago, there was many times I had to let that minimum balance, pay that minimum balance, because you're growing a business.
Right.
So, but that's, there's good interest and bad interest. When you're when you're building a business, that would be considered good interest, but when you're just buying stuff they don't really need, and then you're just paying the minimum, you're paying 3 times really what you bought there. So that's considered bad interest. So you always want to pay those interest rates off, and find out a lot of people don't even know what their interest rate is on these credit cards. You need to call and find out what the interest rate is if you have a high balance. Find out what that interest rate is. If you can transfer it to another card, you need to do some planning. This isn't trying to get you out of debt or anything. It's just common sense. Is try to get your credit cards under control, because you do. What's the saying in the Bible, John, about having debt and all that. You don't want.
Yeah. I mean, the borrower is servant to the lender, and as I always say, when your outgo exceeds your income, your upkeep is your downfall. And there's a lot of people trying to keep up out there, and it's happening. Where people can't pay the groceries, can't pay these rent prices. People that are renting. So I mean, people are getting swallowed up by debt, and like you said, the reason is our government is putting us in debt. And look, this week Joe Biden just cut another 1.2 billion of
Credit card.
loans.
Yeah,
Where's that money
school
coming
loans.
from?
It's awful. It is awful, and that's what's so unfair about that is that there's a lot of people that did not go to school at all, college that went right to work. They didn't have those credit card loans. They didn't get that advantage of getting anything paid off, and then you have that going on. Then you have people that went to school and never made payments.
Worked through.
I mean, what are we talking about when we're wanting to pay off things that that's no responsibility. Isn't there a responsibility to pay your own debt?
Really, that's why everybody feels entitled in this country. The entitlement is out of control. Where take care of me, and now you got all these. And it's sad to watch even these immigrants coming over, and they're getting credit cards with money on it, and they're getting food and their place. And you got homeless people, veterans that have been living here for years. It's just there's no equity anymore in this country.
There's none, and they're getting the hotels. They're getting these nice hotels,
and we're paying for it.
And we're paying for it. And it's so something has to change. And I think, this is going back to the election. I think people are getting sick and tired of what they're seeing on TV, because even the Democrats are talking about it. Even the mainstream media is starting to talk about the immigration problem.
Sure.
And I think this is going to be the downfall of Biden. I pray it is. And now he's going to pass some bill before his speech, and it's going to act like, well, the Republicans aren't doing anything to pass his bill, so I'm going to pass. And that's when you have that bill, that pulpit.
Yeah, he's going to give March 7th is the State of the Union. That should be interesting.
Interesting if he can get through it. Yeah. I'm sure there's money on there what the gaffes are. So, is there going to be a recession? Let's talk about this because, the one guy that we really follow, his name is Brian Westbury, and he's been saying there's going to be a recession. He was talking about first part of this year, first quarter. It doesn't look that way. We did reach out to him directly, and what he was saying is going to be a shallow one. And we're going to explain the difference between a shallow one and a hardcore recession. And a shallow one is there's going to be different different definitions that supports, if it's going to be a hard recession, are we going to skirt a recession, or is it going to be some sort of a recession? And how do it's mixed conclusions right now, but many Wall Street economists believe that the U.S. still doesn't appear to be headed towards a recession. So many of the economists don't think that we're heading towards a recession, which would be fantastic news. But some economists say that the odds of a recession could really mount the longer the U.S. or the Federal Reserve sticks to the current approach, meaning not lowering interest rates. So if rates stay high, that could put us in a recession. Again, some economists like Brian Westbury, that's the one that we follow, still believes that we're going to have what he calls a shallow recession. A definition really of a shallow recession, it occurs when some parts of the economy are performing on an average while others are struggling. And you see that right now. You see where some sectors are doing good and some are struggling and laying off. So you see that. You see tech companies laying off.
Yeah.
You see different sectors that are doing better, and then different sectors that are doing awful. So this is some people feel like they're in a recession right now. Some companies feel like they're in a recession because their economy is. I was just talking to a guy this past week, and he deals with a company, the tractor sales. It's a big
John Deere? Or?
No, it's a company. He deals with a couple companies like
Caterpillar, no?
No, it's called Tractor
I'm
Sales.
0 for 2.
Yeah, 0 for 2. It's a store.
Right.
It's a big store called Tractor something, and they were going to do a lot of work there, but then they shut it down, so they're hurting right now, but they said next year maybe we'll reopen it, but it's because it's election year. They don't want to make any big moves. And so some companies are going to hold back, and some companies don't need to hold back. So every sector is going to be different. But but the stock market, if you look at the overall stock market, it's doing good. But there's a few companies that's driving the overall market. We're going to talk more about that when we get back. Good morning, Southwest Florida. You're listening to Saving the Investor Radio Show. I am Alfie Townsend, Southwest Florida's certified financial planner professional, here with Pastor John Antonucci, and we are here to really talk about retirement. That's what you want to hear about and what you should be doing during this time. There's post-retirement, people that are about to retire, don't know if they can retire. We're going to talk a little bit about that. Of course, about inflation and so much more. So stay tuned, and welcome to the show again.
Yeah, great to be in studio as always. Alfie's going to be sharing some key strategies to identify opportunities arising from market shifts, which we always experience, and help you balance your portfolio accordingly. So trust me, you don't want to miss these valuable insights. If you're listening to us each and every week and you've never made time to sit down with Alfie, he is available here in Fort Myers or Naples, and he does what's called the retirement simulator process. And that retirement simulator is comparable to what a pilot does when he goes into a simulator and he deals with all kinds of issues that might arise that are unforeseen. Well, it's the same thing in your portfolio. He's going to take a deep dive into your current portfolio and see what's really going on. He wants to expose any hidden fees that are in there that could be eating up your returns. He wants to make sure that you're not taking undue risk. What is your risk factor or your risk tolerance for the amount of return that you're getting? Alfie wants to make sure you're allocated correctly, diversified properly, that you're rebalancing. He just has an incredible program that he'll put your portfolio through and take you back 5 years and put it side by side with his. And you'll be able to see exactly how his portfolio would have performed if you were using his income strategy and plan. If you don't have an income plan, get a hold of Alfie today. All you have to do is text the word VISIT, V-I-S-I-T, to 239-747 1077, or you can call that number and ask the operator to set up a time to meet with Alfie here in Fort Myers. He is a certified financial planner professional with over 40 years, wow, Alfie, of experience in this industry. And I guess in 40 years, you've seen a lot. And as we're talking about a shallow recession, you've seen deep recessions before, haven't you? And you've navigated your clients through them.
Yeah, of course, one of the great recession was the one in '08. That was awful, and everything seemed to be crashing down. You had the financials, you had the housing, you had just retail buildings, and everything just seemed to be coming down at the same time. So that one lasted about a year and a half, and that's the longest. Most of them last, on an average of less than 5 months. But that one in '08 was real bad. So yeah, I've seen a lot of different recessions. We've seen in that time period, we've seen a lot of things that really shocked the market. And the market is resilient. You see it go down, but you see it always rebound and then hit another high. So you don't really hit you might hit the 10% down, which is really when you're in a correction. But a bear market, is 20% down. A bull market is when it's running, and you're going to start hitting new highs. So that's what's wonderful about the market. There's a lot of wealth that can be created in the market, but there's a lot of losses that's been created in the market too, because people weren't diversified. They put all their money with one or two companies. They left it with a company stock. So that's why if you don't have a plan, I think what I want to talk a little bit about, John, this morning is how we can, I'm trying to put myself in our listeners' shoes, meaning what, if they're thinking about changing an advisor or getting an advisor for the first time, is there some things that they can do? We were doing a workshop, this past week, and we were just giving them some of the strategies that we do for our clients here at the Advanced Retirement Group. And majority of them never heard of anything like this, and we're going to talk a little bit about some of the strategies. Some of them is what we call direct indexing, which means that we were able to take their accounts that they currently have and create extra income from them, like an S&P account, and create it, by using some options, we were able to create an extra 4% of income on these accounts. Someone that had heavy exposure with one stock, if it was Apple, if it was NVIDIA, Google, whatever it is, instead of selling out that stock, what we were able to do is put an option on there that they were able to get 5 to up to 10% added return, added income that they weren't getting without selling the stock in many cases. So when I was explaining this to people, they said, hey, why wouldn't everybody do this? And I said, were you ever shown this from your advisor? They said no. And I said, have they talked anything about tax harvesting, meaning looking for losses in accounts that tracks the S&P? They said no. And I said, well, that's another thing that we do. So, think about this. Think about, having 50 to 70 companies that represents majority of the S&P 500, but take advantage of a downturn in the market. So let's just say you own Exxon and it starts to fall. It gets a bad earnings report. It starts to fall. And all of a sudden you could sell that Exxon and take that loss. And let's say that Exxon goes down and you're down $20,000 for argument's sake. So you would sell Exxon, but if you can't buy it right back because it's at a loss. It's called a wash rule. But what you can do is you can buy another company similar, like a Chevron or something. So you still stay invested in the market, but what you're doing is you're taking advantage of what the market gives you, and you can have some future losses that can offset gains down the road. And you're not losing returns because you're staying invested with another company that's similar. So people, if your advisors aren't doing stuff like this, and I'm just giving you some just basic examples of what we do here at the Advanced Retirement Group with our clients. And if your advisor isn't talking about tax strategies, which we're going to talk about next, or some of these strategies that we're talking to you about, then maybe you've outgrown your advisor. That's why I flat out told these people at this large convention, I said, maybe you just outgrown your advisor and it's time to look for a different one.
Yeah, that's very important. And there's 3 types of people listening to us today. Those of you that are listening that are doing it solo, that means you don't have really an advisor on your side. Those that have an advisor, but maybe they're not meeting your expectation. And the third person might be one of Alfie's clients already. So if you're in that category of going solo, or maybe you're saying to yourself, my advisor has never talked about these type of things to me, this is why you want to get a hold of Alfie's toolkit. Listen, this is absolutely free. It's going to help transform your worries of retirement into confidence. Pick up this toolkit, get it for yourself, look at the information that's in there, because Alfie's going to give you materials that talk about, will your money last as long as you do? Listen, you don't want to go back to work after you retire. He's going to talk to you about strategies that can help you stay retired. That's his goal, and that's his job, is to keep his clients retired after they retire. Are you paying too much in taxes in retirements? If he can reduce your tax liability, obviously, that's going to put more money back in your pocket. The Social Security Decisions Guide, if you haven't taken Social Security yet, when is the opportune time to maximize your benefits? Alfie has a program that will run your numbers, that will tell you exactly when the best time to take your Social Security. Simply text the word KIT, K-I-T, to 239-747-1077. Listen, if you don't text, you can call the operator, tell them you want to take advantage of Alfie's free toolkit. Call the number right now. Don't hesitate. 239-747-1077. You know, Alfie, those that are going solo probably think, well, I'm going to save a percent or two by not having an advisor, but they could be losing a lot of what you're talking about in their portfolio, and they may not be maximizing their returns. You really bring 40 years of experience as a certified financial planner professional and a fiduciary that has seen the ins and outs of investing, and really you put together a plan and a strategy that's tailor-made for each individual, don't you?
John, that makes so much sense when you think about it. If you're doing it yourself, you don't know if you're doing a good job until you compare it.
That's right.
Right? So that's what we're giving you an opportunity. Bring it in. Let us do a comparison of what we do, and we add our fee in there when we do this assessment. We add zero fee for you. Okay? When we run these comparisons, it's ran on a very awesome program that can it goes back, year to date, 1 year, 3 year, 5 year, and it will show you how you would have done with us and how you would have and how you did with yourself. So this is something that you want to look at and say, you know what, it's costing me money, or I'm doing a hell of a job.
Yeah.
You're going to either say I'm killing it. Right? Yeah, I'm crushing it. Yep, Warren Buffett, man. I'm Warren Buffett Jr. Or I am, man, I didn't know I could have done this or that. And a lot of times, a lot of these managers that we use are managing money for these big companies, these big Fortune 500 companies. They manage it for universities. They manage it for different states. So these are what you have available through us because of our buying power that we have with the managers that we use. So take advantage of it, and like I said, some of the strategies that we're using, we're looking for tax loss harvesting. In some cases, we're doing that for people. We're looking for additional income from the portfolios that they have that you're not utilizing that. So these are things that I always say, if we cannot add value and returns, we don't deserve to get paid. We just don't deserve to get paid because we have to show you that we're doing something with the income plan we're putting together with you, the financial plan we're putting together with you. If we can show you that we're giving you value, then it's worth it. If we can't, then you know it. So if you are doing it yourself, or if you have another advisor that you just don't know if it's the right one for you, it's a great time to give us a call, come in, and then see if we can put you in a better shop. 239-747-1077. That's 239-747-1077. We'll be right back.
10:30. Why don't you talk about this client with that NVIDIA that you turned into a lot of income, right?
Yeah, so you welcome them back.
All right.
Give her number.
Welcome back to Saving the Investor with certified financial planner Alfie Townsend. Alfie has over 40 years experience in this industry, and he's a fiduciary, which means his responsibility to you. And there is a ticking time bomb that demands your proactive attention because taxes are complex. The ever-changing tax law can leave you feeling overwhelmed. But it really doesn't have to be, because Alfie is here to guide you towards securing your financial future. Imagine a world where you can save more on taxes and protect your wealth. It's not just a dream, it's a reality with Alfie's tax bill calculator. Alfie has a plan and he has a program that will identify 3 things that he's looking to help you with. Number 1, lower your tax bracket. Number 2, protect your money when taxes rise. And number 3, the big one, creating a tax-free income. It's absolutely free. Just call or text the word TAX, T-A-X, to 239-747-1077. That's 239-747-1077. Either text the word TAX or call the operator at 239-747-1077. Get a hold of Alfie's tax map today. It's absolutely free. And Alfie, regarding that tax bill calculator, you had a client come in with a lot of NVIDIA stock, and you were able to generate income based upon that tax bill calculator. What was that all about, and how can that really relate to our clients or our potential clients that are listening here on 92.5 this morning?
Yeah, good question. So we had someone that came in. NVIDIA is more of is a growth company. They're not going to be paying dividends. But he did not want to sell this stock, but he had a lot of stock. But he wanted to be able to get some income. So what we offered him was putting some options on, direct indexing with this one company, with this one stock that he had, and we were able to create, in his case, almost $300,000 of income that he did not have when he walked through that door.
Wow.
And people say, well, how did you do that? And that's without selling it. Now what happens is this: if the stock went up a certain percent, he would have an option. He could give up some of that income that he got to buy this option back, so he did not have to sell, or he could have kept the income and sold and made 30 additional percent on that stock before he would have to sell it or make a decision if he wants to roll it up a little bit for another term. So he has that option. You have that option. If you have a stock like now NVIDIA has a lot of volatility, so that stock pays you a pretty good premium for income. But if you have a stock like Apple, we had one that was UPS that pays pretty good, and those are good because they're probably not going to come anywhere near the strike price. So these are companies that have a lot of gains in there that you don't want to sell, or if you have a big holding with one company and you just want to create some additional income that you're not creating now, you still get the growth and you get additional 4, 5, 6, up to 10% additional income by doing this strategy that we do here at the Advantage Retirement Group. So if you're looking for income, give us a call. John will give you the information to really utilize what you currently have that you might be holding on to a gold mine with additional income and you don't even know it.
Yeah, that's important, and that's why you want a certified financial planner like Alfie Townsend on your side. Alfie doesn't market time or stock pick or track record invest. He has time-proven, tested strategies that will help get you to and through retirement. If you want to find out more about this type of strategy that he put together for this client, give him a call here at 239-747-1077. You also can text the word VISIT, V-I-S-I-T, to 239-747-1077. You can visit with Alfie in Fort Myers or Naples. You owe it to yourself to at least get a second opinion, get a second pair of eyes on your strategy and your income plan. If you don't have an income plan, Alfie will put one together for you. And if you're going solo, if you're doing it yourself, why don't you compare and see what he could do for you that really could maximize your retirement benefits, your retirement plan, and strategies maybe that you'd never heard of before, like you're hearing right now on this radio broadcast. 239-747-1077. And we talk about creating income. We talk about someone creating $300,000 of income that they never had before. How important is tax planning in retirement, and how would people know if their advisor is qualified? Because taxes is a whole separate apple compared to just strategies of investing, isn't it?
Oh yeah, it's totally different. So usually what happens, John, when people come in, we're going to look at we do what we call the retirement simulator, and we're going to find out what's going on inside their portfolio, what their holdings are, and look for opportunities. We want to look for opportunities. A lot of people in a volatile market, people are frozen sometimes. They don't want to make a choice or make a change because they're frozen, they're afraid. But this is the time when the market is up, when it's down, it doesn't matter. You want to know what's going on inside your portfolio. So what we would do is we would analyze everything and say, okay, this is what we found where we can get you an extra 4% on this or extra 5%, even higher on some cases, by doing this, the same thing that you're doing, but this is what we can do for you in addition to creating an income. We might want to look at a structured note. These structured notes are still paying in that 7 to 8, 9% range. So that's just income coming in, and this is guaranteed. It's tied to how the S&P and NASDAQ, as long as it doesn't fall below 30%, you're going to get your interest payments each and every month. That's guaranteed for 12 months. Usually they get called after that, then we do something different. So there are things out there, but unfortunately, people tend to, just be lackadaisy, and it's easier to do nothing, John, than to pick up that phone or text that number to set up a time to see if we can put them in a better position. And I'm telling you, we're going through, we have a large debt, 34 trillion plus debt here in the government in the United States, and we are in a situation where taxes are probably going to go up. So tax planning is a great thing you need to look at, and tax-free income is the best thing to look at. If you don't have any tax-free income, this is a great time to look at tax-free income.
Yeah, you want to get a hold of Alfie's tax map. He's put together a program that you'll be able to plug your numbers in and basically find out exactly what plan you can put together to reduce your tax strategies. That's what Alfie's looking to do, because, what are the markets going to do? We don't know. Will our economy rebound or go up or down? We don't know. Negativity really can impact your retirement plan. And Alfie has put together a tax bill calculator that really can help you take control of your financial destiny. And all you have to do is pick up your phone and or text the word SAVE, S-A-V-E, to 239-747-1077. That's 239-747-1077. Text the word SAVE, and you'll be able to get a hold of Alfie's tax bill calculator. That will be a tool that won't allow a ticking time bomb to catch you off guard. His tax bill calculator will help you get you to and through retirement by reducing your taxes. And Alfie, one of the things that you do is you monitor your clients' progress. A lot of people that are listening to us don't hear from their advisor only during the time of really taking out their distributions, their minimum distributions. But you track your clients' performance to ensure that they're on track. That's an important part of what you do, isn't it?
Yeah, because every when we meet with our clients, and what we do is I'll do a video every Friday, and we send that video out, and there's always time and they have my schedule if they need to have a phone call with me or a Zoom meeting or come in to do additional questioning or review on anything. We want to look and see if we're on track with our projections we only show our income projections at 4%. So we want to make sure that we're lowballing everything. We're not. I remember when I first got in the business, the projections were 8 and 9%.
That would be nice.
11%. No, these were projections though, and what happened with those projections? They didn't come to fruition. They were misleading, and they were false, because you cannot. That's when I first got in the business. They were showing this. I'm like, that's a lot of interest, but we show it at 4, and we adjust it every year when you meet. So, we hope that you can give us a call and give us an opportunity just to show you what we do here at the Advanced Retirement Group with our clients. And if we can put you in a better position, we show you. And if we can't, we show you that also. But again, this is Saving the Investor. I don't know if you ever watched our TV show. It's on NBC2 right after Meet the Press. It's 11 o'clock, 11 to 11:30. We get into a lot of really details. You get to see the details here. You get to hear the details. But if you want to look at our show, you can check that out. And, of course, right here on 92.5, we've been on Fox here for over 10 years now, and we have Jake the Millennial helping us, and we appreciate him, and we appreciate you. Stay tuned until next week. Be blessed.